And, I talk about gold a lot because it's a form of money, and I do the monetary analysis. I do invest in gold mines, but I don't hold myself out as a geologist, but I do think about it from a monetary perspective. And then people always say, Jim, what about silver? What about silver? I'm like, look, if gold soars the way I expect, silver's along for the ride. There's not going to be a world of $3,000 gold and $20 silver. That world doesn't exist. If gold's at 3,000, silver is going to be pushing 100. So without giving an exact forecast, silver will be along for the ride.
Today, we delve into the world of diversification, a fundamental strategy often misunderstood by many. Renowned economist and investment strategist Jim Rickards provides us with invaluable wisdom on constructing a truly diversified portfolio. Join us as we unravel the nuances of diversification and explore Jim Rickards' unique perspective on the current financial landscape. Diversification is a term frequently thrown around in investment circles, but its true essence often eludes many. Jim Rickards emphasizes the critical distinction between mere asset allocation and genuine diversification. While holding various stocks across different sectors may seem diversified superficially, in times of crisis, correlations between these assets can soar, negating the intended benefits of diversification. Rickards advocates for a more nuanced approach, one that involves not only diversifying across asset classes, but also within them. He suggests incorporating assets that thrive in diverse economic conditions, such as energy, natural resources, and agriculture. By strategically selecting sectors and assets resilient to market turbulence, investors can fortify their portfolios against unforeseen challenges. In uncertain times, maintaining a cash buffer becomes imperative. Rickards recommends allocating a significant portion of the portfolio to cash, providing liquidity and stability during market downturns. Treasury notes, particularly 10-year and 5-year Treasury bonds, offer attractive options for preserving capital while generating modest returns.
The first thing I say, diversification, the math and the science behind diversification and why it's a good strategy is very clear. There's not much debate about that. The problem is people don't understand what diversification means. They think if they have 50 stocks in 10 sectors, semiconductors, consumer non-durables, or whatever, they're diversified. And what I say to them is, you may have 50 stocks, but that's one asset class. You're in stocks. And in stressful situations, they become highly correlated. So you're not getting the benefit of diversification. You think you are, but you're not. So what does a diversified portfolio look like? Well, I have a slice of stocks. I'm not anti-stock market, but you got to pick the sectors and the stocks that will perform well, even in the kind of conditions we're talking about. And I would go back to energy, natural resources, agriculture. So, a Marathon, ExxonMobil, Chevron, ADM, Cargill, mining companies, and not just gold, yeah, but I recently invested in a lithium mine. I think the climate alarmists, I think the Green New Deal, I call it the Green New Scam. It's a scam, but it doesn't mean it doesn't have legs, whether you like it or not. The fact is, it's going to go on. So the lithium's in short supply, graphite, et cetera. So there is a portfolio you can have, which is natural resource oriented, that will do well, even in the kind of tough environment we're talking about. Slugger cash, absolutely, maybe as much as 30%. I like treasury notes, 10-year treasury notes, but seasoned to taste. If they're a little too volatile, look at 5-year notes, 2-year notes. They're going to come down a lot, not right away, not tomorrow morning, but sooner than later, because of everything we discussed, which is a recession, and interest rates will follow. They're a lagging indicator, but that'll happen. Gold, I always recommend a 10% slice. There's hate to get too deep in the weeds in terms of bond math, but there's something called a DV01. DV01 is the dollar value of 1 basis point. What that means is, obviously, basic bond math, interest rates come down, the price of the bond goes up. They're just inverted. It's a little counterintuitive, but rates come down, the bond goes up. The question is how much? And the lower the interest rate, the more the price of the bond goes up for every basis point drop in rates. So in other words, if you go from 9% to 8%, you'll have a nice capital gain on your bond. But if you go from 3% to 2%, it's still a 1% drop, but you're going to have a much bigger capital gain. In each instance, it's a 1% drop in rates, but the amount of capital gain on the bond is much higher as the DV01 is higher when the rates are lower. Again, it's all counterintuitive,
but it's sort of like a Richter scale. Each new increment is a much higher magnitude.
The lower the rate, the greater the capital gain on each basis point drop in yields. That's the basically. So yeah, when you go from 3% to 2%, that's a home run in terms of capital gains. So you get the yield, you get the safety, you get the liquidity, and if you feel like selling it, you got a nice fat capital gain. I would get silver dollars, American silver eagles. Yeah, a monster box. Bit of jargon. Monster box comes from the U.S. Mint. It's treasury green, nice shade of green. It comes with a compression strap. I recommend don't open it, unless do not break except in case of fire. But inside are 500 1-ounce American silver eagles. That's a lot. They'll feed your family for probably a year, and they run. It's a market price, but be around $10,000-$12,000 for a monster box. But to me, it's like battery and flashlights. Just have one, stick it in a safe place. And I talk about gold a lot because it's a form of money, and I do the monetary analysis. I do invest in gold mines, but I don't hold myself out as a geologist, but I do think about it from a monetary perspective. And then people always say, Jim, what about silver? What about silver? I'm like, look, if gold soars the way I expect, silver's along for the ride. There's not going to be a world of $3,000 gold and $20 silver. That world doesn't exist. If gold's at 3,000, silver's going to be pushing 100. So without giving an exact forecast, silver will be along for the ride. Silver is a little more difficult to analyze because it has industrial applications. Gold really doesn't. Gold's not good for anything except money, but it's the best form of money. Silver is used in a lot of applications. So if you have a recession, it's perhaps the case that the monetary value is going up, but the industrial input value is going down. So it's a little bit more of a mixed bag, but silver is going to do fine. And I do think it's extremely practical because in a world of CBDCs, silver will be a form of spending money. Gold, even the 8-gram coin I mentioned, the quarter ounce American gold eagle, still $500. It's like pulling a $500 bill out of your wallet. It's a lot for groceries.
Right.
Gold, often touted as a safe haven asset, occupies a notable position in Rickards' diversified portfolio. Beyond its monetary value, gold serves as a hedge against inflation and currency devaluation. Rickards elucidates the concept of duration-weighted portfolio performance (DWPP), highlighting the amplifying effect of declining interest rates on bond prices, especially in environments of ultra-low yields. Silver, often overshadowed by gold, emerges as a compelling investment choice. With its dual role as a monetary metal and an industrial commodity, silver exhibits resilience across diverse economic scenarios. Rickards underscores the practicality of silver, particularly in a landscape increasingly shaped by central bank digital currencies (CBDCs). Income-producing real estate, another cornerstone of Rickards' diversified approach, offers stable returns and inflation protection. Residential properties in burgeoning markets like Austin or Phoenix present compelling opportunities for investors seeking long-term growth and cash flow.
Income-producing real estate, I wouldn't get into commercial real estate, residential. The prices are, home prices are coming down a little more in some markets than others. But if it's income-producing and it's solid and it's in a place like, someplace people want to be, like Austin or Phoenix or whatever. I mean, I know there's markets down a little bit right now, but it's like buying a 10-year bond. It's got steady monthly income and or certainly farmland, but income-producing real estate, not commercial office buildings, should be a part of a diversified portfolio. Yes, I like private equity, and it's you got accredited investor issues and finding good deals and good promoters and good management. But there's some some good deals in the mining sector I like, and well, that would be one. I mean, we haven't really talked about the important things going on, but we'll maybe do that in another interview.
Okay. And hey,
seriously, everything we talked about is sort of pales in comparison to what's going on in Ukraine. We're kind of on the march toward nuclear war, but maybe we'll talk about that some other interview. If you talk about what they call legacy media, mainstream media, so Washington Post, New York Times, LA Times, NBC, ABC, CBS, MSNBC, CNN, that run of characters. The first thing you discover is I know a lot of these people. I've been on all these programs. I've done this for a long time. I spent a lot of time in Washington, had dinner with most of the, or lunch or whatever, dinner actually more often with most of the names you've heard about. Some of them are fine, some of them nice. A lot of them are either not that bright, or, I mean, they're good on camera, or whatever. They got a desk at the Washington Post. They're not that bright. Or if they've got some degrees, they've been kind of indoctrinated. We're at the point now.
Private equity, though restricted to accredited investors, presents avenues for accessing high-potential investment opportunities. Rickards advocates for discernment in selecting private equity ventures, emphasizing the importance of due diligence and competent management. In the mining sector, Rickards identifies promising prospects for private equity investment, driven by the growing demand for critical resources. These ventures offer exposure to commodities essential for advancing technology and infrastructure development. Beyond financial markets, Rickards offers insights into the evolving media landscape. With traditional outlets facing declining viewership and revenue, discerning consumers seek alternative sources for reliable information. Rickards underscores the importance of critical thinking and diligent research in navigating today's media landscape.
I mean, a lot of these people are 28, 33, 34 years old. There's nothing wrong with that. That's, good. You're in the heart of your career, but that means they graduated from school in, 2016, 2017 or whatever. And they're thoroughly indoctrinated. I went to school when, we learned it was pretty rigorous. I mean, I had one program where they graded, you needed a C+ average to graduate, but they graded on a C- curve. So you're like, well, how do you get it? How do you even get a C+ if they're grading on a C- curve? The answer is people quit. In other words, you were trying to struggle to be. I did get an A in partnership taxation. I'm proud of that. But the standards are down. The emission standards are down. Affirmative action takes over. When you get into the classroom, I don't care where you're at, Ivy League, whatever, it's just indoctrination. The market has a way of sorting it out. I mean, if revenues are down, advertising's down, viewers are down, subscriptions are down, eventually, as you said, they will go out of business, not overnight, and then new media channels will arise. And, there's a lot of garbage on the internet, but there's a lot of good stuff. And, if you want to keep tabs on the war in Ukraine, you have to know where to look. It's not easy, but there are a number of channels and I'm talking about, military officers, colonels, brigadier generals, people on the ground in Ukraine, not, some studio in New York. You can find out what's going on. But I think my intelligence training is helpful because you have to be very persistent and know how to dig.